Hello everyone, this is Tejashwani. In today's classes, let's discuss about the capital gain, test your knowledge, all the questions. Okay, there are seven test your knowledge questions. We are going to focus only on those. Okay, so how we will move forward with the class is very simple. Whatever the questions are there, along with that, the relevant capital gain provisions, whatever is been taken in the question, we are going to discuss those questions. If you want a detailed video of the capital gain revision, you can watch the capital gain revision videos for the respective assessment here. Now, let's move forward with the questions. Okay. Mr. Mithun purchased 100 equity shares of uh, Good Good Money Co Limited on 1/7/2007 at the rate of 1000 per share. Okay, now, what happened? Company allotted the bonus shares at the ratio of 1:1 on this day, and he also received a dividend. Dividend is his other source of income. He has sold all the shares at the rate of 4,000 per share through recognized stock exchange, which means to state is a listed shares, and has paid the brokerage of 1% on and the security transaction tax of 0.02%. Compute his total income, and what have they asked in the question is total income and the tax liability for AY 24-25 if Mr. Mithun pays tax under the default tax regime, assuming he is having no other income other than the given above fair market value of the shares of Good Money Co Limited on 31/1/2008. What have they asked? Total income and the tax liability of Mr. Mithun under default tax regime containing he is having no other income, fair market value of the Good Money listed shares, that is listed company shares value, fair market value is 2000. Clear? Now, what is this provision speaking about? Here they are speaking about section 112A, wherein this section speaks about the long term capital gain in case of three capital assets, that is listed shares, listed units of mutual fund, that is equity oriented fund, listed units of business trust. All these three need to be listed. These three category, whatever I've told, these three comes under 112A, wherein your tax liability will be 10% excess of 1 lakh rupees. Okay. Now, Mr. Mithun, this fellow purchased 100 shares, and what happened? He has purchased at the rate of 1000. So, can I say his actual cost price is going to be 1000? His actual cost price shall be 1000 multiplied by 100, its actual cost is 1 lakh rupees. Clear? Now, this company allotted bonus shares issuing 1:1. This fellow was already holding 100 shares. If it is 1:1 is the case, he would have got for every 100 shares held, he is getting one share. Sorry. For every one share held, he is getting one share. So, if he is holding 100 shares, how much how many bonus shares will he get, people? It is 100. 100 shares held, one share held, I'm going to issue one share for you if you are holding one share. And if you are holding 100 shares, then you are going to get another 100 shares as bonus shares, right? That is what happening over here. Now, he also sold after getting the original shares of 100, bonus shares of 100. What this fellow has got, this fellow also received the dividend of rupees 10 per share. He has sold all the shares, that is 100 plus 100, 200 shares this fellow has sold at the rate of 4,000 per share. Okay, this is going to be your sale consideration, 200 into 4,000. This is your total sale consideration. We are going to do the computation in a different manner. I'm just explaining the question. Okay, and he has also paid the brokerage of 1% on the sales. That is, however, considered in my capital gain computation and securities transaction tax. People, you are going to understand your test your knowledge questions, whatever questions we are solving in this class, only and only if you already know the concept of capital gain. I'm telling you again, if you have not don't know or don't remember the concept of capital gain, first go through the provision class and then come to this questions class. Okay, let's continue. Compute his total income and the tax liability for AY 24-25 if Mr. Mithun pays tax under the default tax regime, assuming that he is having no other income. Okay, so now let's try to understand. First of all, what have they asked? Total income and the tax liability. I've told you what is the gross sale consideration, people. See here, you are having two different. One is original shares and one is going to be your bonus shares. Bonus shares, original shares was purchased on 1/4/2007. People, for these shares, if you are holding it, that is for listed shares, if you are holding it for a period of less than or equal to 12 months, short-term capital gain, it is called a short-term capital asset. If you are holding it for a period of more than 12 months, then it is going to be called as long-term capital asset. So from long-term capital asset, you're going to determine long-term capital gain. From short-term capital asset, you will get short-term capital gain. Now, this is going to be a long term for that matter. You have purchased on 1/4/2007. You have sold it in PY 23/24 on 1/10/2023. Obviously, it is more than 12 months. So, it's going to be a long term capital asset. So, whatever gain you will get, it will be long term capital gain. Company allotted bonus shares of what date people on 1/12/2022. When did this fellow, Mr. Mithun, sold this one? Sold this all the shares, that is including bonus shares, on 1/10/2023. If you observe over here, it is bonus shares is held for a period less than 12 months or equal to less than or equal to 12 months. So in this case, whatever the bonus shares that you are determining, bonus shares will be treated as short-term capital asset. Your original shares will be treated as long-term capital asset. The gain which you are getting out of it will also be called as short-term capital gain or long-term capital gain respectively. Clear? So for original shares, we already know we are going to determine it as a long-term capital asset. So gross sale consideration, people, 100 is the original shares. Original share, how much you have sold per share? 4,000 rupees. So your total sale consideration is 4 lakh. Brokerage has already been told in the question is the 1% is the brokerage. Brokerage is going to be whatever sale consideration is there multiplied by 1%. 4,000 you are going to show over here and close. Whatever the net sale consideration is going to be, it is going to be the subtraction minus this one. Net sale consideration is so much. When you're determining the cost of acquisition, people, always remember you have to determine based on this consideration, that is higher of the following: higher of actual cost of acquisition or lower of fair market value or the actual sale consideration. Clear? Now, why do you determine the cost of acquisition in this manner? Is that very simple? People, first of all, can I say you have sold this asset for the value of 4 lakh, okay? Now, what happened prior to this fair market value? I'll tell you the reason why the computation is like this. Okay. The fair market value is on 31/1/2020, 2018. Remember, on or before this 31st March 2018 date, that is before the announcement of the budget on 1/2/2009 2018, before that date, that is 1/2/2018 was the budget announcement, was the budget announcement date for that year. Before that date is 31/1/2018. What the date in that budget announcement date on 1/2/2018 was, we had an exemption called as long-term capital gain in case of shares being exempted. We had that exemption. That is, every rupee of the capital gain which you got was exempted. If it was 10 crores, if you had got 10 crores as long-term capital gain from the sale of shares, it was exempted, people. 100% of this amount was exempted from tax. That is, you were not even paying zero. That is 1 rupee tax also, you are paying zero tax for this. Clear? Before that, it was the case. But on the budget announcement date on 1/2/2018, they told capital gain, we are removing that exemption. We are removing that exemption of every rupee of the capital gain. That is, now whatever the capital gain you are going to get is going to be flexible. Now people started getting panicked. Arey, before, if I would have known that, I would have sold before only. Why should I have waited till year? Now I should pay tax for every rupee. That is on or after 1/2/2018. So what government did was, Arey, you don't panic over here, okay? Do one thing. Always remember, if your actual sale consideration, I'll take a different number over here for your understanding. Let's consider the fair market value is 5 lakh. Your actual sale consideration is 6 lakh. Your cost of acquisition is 4 lakh. That is, can I say, whatever the sale consideration you're considering, net sale consideration is suppose 6. The same thing has been recorded here 6. Your actual sale consideration. In this example, in this whatever example I'm giving, I'm not considering this mean one. I'm just taking a random number for your understanding. Suppose your brokerage is 0 in this case, your actual sale consideration is 6 lakh. Now, whatever is your actual cost, you have incurred this cost before that. That is, you have purchased the shares in 2005 and 6 only. When you purchased the shares, it was 4 lakh. When you're selling it, it is 6 lakh. Okay. But they have told you are selling it in this year. You are purchasing some year. You are selling it in 23/24. Fair market value as on this date, 31/1/2018 is going to be 31 1 2018 is going to be 5 lakh. It means if you're suppose if you would have sold it on 31 1 2018 up to 5 lakh rupees of your sale consideration, whatever capital gain you would have got, that wouldn't have been subject to tax, right? 200% there would be no tax up till 5 lakh rupees of the sale consideration. If that is the case, now also what the government is stating, "Arey, don't worry here, do one thing. Up till 5 lakh rupees, that is up till 5 lakh, don't consider that as your, for the purpose of your calculation of capital gain. That is, we will consider that as your cost based on the calculation. Try to understand something carefully. Okay. Fair market value as on 31 1 2018, 5 lakh is in the point which I am stating over here, 5 lakh. 5 lakh or 6 lakh, whichever is lower is the point. Correct? 5 lakh or 6 lakh, whichever is lower. It means up till 5 lakh rupees, I wouldn't have paid any tax. That is lower of the following. Minimum of this amount of 5 lakh, I would consider the solution as my part. Okay. So my actual sale consideration, my actual cost of acquisition is 4 lakh. I will not pay, that is my cost of acquisition, whichever is higher, I'm going to consider. That is nothing but 1 lakh rupee will be considered as my long term capital gain. Every We'll take different examples. See, people, let's consider the sale consideration to be 12. Okay, sale consideration to be 12, and the fair market value is going to be 5. What I told, that is up till 5 lakh rupees, whatever might be your consideration, people, up till 5 lakh rupees, whatever the fair market value which you have over here, you're not going to consider, or you're not going to take it as your sale consideration. That is, you're going to consider it as your cost, because more the cost, less the capital gain you would get, less the capital gain, less the tax on capital gain. That is the criteria. So your intention here is to increase the cost as much as possible so your capital gain gets reduced. Clear? If I'm speaking about the fair market value as on 31 1 2018 over here, in my case, it is in this example, it is going to be 5 lakh. 5 lakh or 12 lakh, whichever is lower, minimum for 5 lakh rupees I'll not pay tax. Whatever the money which has been accumulated after this announcement date, that is, I'm selling it at 5 lakh. If I would have sold on 31 1 2018, it would have just been 5 lakh. Whatever the difference of 7 lakh rupees which you have over here, this 7 lakh rupees would be considered as my taxable point. That is, I'm going to allow my cost as 5 lakh rupees over here, whichever is lower. That is my cost. My cost of acquisition I'm going to consider in this two categories is going to be lower of the following. That is maximum of 5 lakh. 5 lakh I've considered over there. Lower or higher of the following I have considered. Okay. Let me take a different example. Suppose your cost of acquisition, your sale consideration is 12 lakh. 12 lakh. Suppose the fair market value was 14 lakh at the time of 31 1 2018, and there was some problem with the company shares fell down, and now the sale consideration is 12 lakh. Okay. In this situation, if you observe, your fair market value is greater than your sale consideration. No? It means if you would have sold on 31 1 2018, you wouldn't even have paid single rupee tax. That is up till 14 lakh rupees, you wouldn't have paid any long term capital gain tax. It means you shouldn't be paying any tax up till 14 lakh rupees to the company in this case. So, lower of the following. Up till 14 lakh means that is going to be the maximum amount of 14 lakh people, not the minimum amount. Right? Maximum of 14 lakh rupees you need not pay. So, can I say maximum of 14 lakh means 12 lakh comes below that. So, 12 is covered under the maximum of 14. I am going to consider lower of the following, that is 12 lakh. 12 lakh or 4 lakh, my actual cost, the money which I paid is 4 lakh. Up till 12 lakh, I wouldn't have paid any tax at all. I'm going to consider 12 lakh over there. Now, whichever is the higher of the following, 12 lakh, I will not pay any tax over here. My long-term capital gain in this situation would be 0. Everyone understood? So, these are the similar situations. For more explanation, for more understanding, you can watch the provision classes. There, it is properly provided. Everyone. So, in this case, can I say my Actual cost is 1 lakh, people. The money which moved out of my pocket is 1 lakh. Lower of the following is going to be exempted. That is the maximum amount of 2 lakh rupees, whatever I am writing over here. Maximum amount of 2 lakh. Maximum amount of 2 lakh. Or my actual sale consideration 4 lakh, whichever is lower. That is, as on 31/1/2018, if I would have sold my shares, I would have got 2 lakh, till which I wouldn't have paid any tax. If that is the case, whichever is lower of the following, that is the 2 lakh that you are going to consider over here, your actual cost of acquisition is going to be 1 lakh. Whichever is higher of the following, up till 2 lakh rupees, however, I wouldn't have given any tax for you. Take the 2 lakh, higher of the following only you consider. You have paid 1 lakh rupees for that matter out of your pocket, totally fine here. But government told don't pay up till the fair market value as on 31/1/2018. So I'm considering 2 lakh, whichever is higher. That is why it is considered as whichever is higher. Suppose the cost of acquisition is 3 lakh. Government told as on the fair market value, that is 2 lakh, don't pay any tax. But actually out of my pocket I've given 3 lakh, no? So it is very ideal for me to consider the minimum amount in which the government says don't pay tax, and the maximum amount of which I've already paid out of my pocket, whichever is higher I should be considered for my beneficiary. So here in this case 2 lakh rupees is the case. I have considered my cost of acquisition to be 2 lakh. Now whatever the gain which I get over here is going to be a long-term capital gain. This is long-term capital gain for original shares. For bonus shares, what you're going to do is that whatever sale consideration, 100 shares, 1:1 ratio we have already seen. 100 shares multiplied by 4,000, you're going to get 4 lakh. Now, whatever the brokerage you are getting, brokerage at the rate of 1%, 4 lakh into 1%, you're going to get 4,000. Whatever net sale consideration, people, bonus shares concept all of us know. Bonus shares are the shares which are given to existing shareholder at free of cost. Company will not collect any rupee, that is not even single rupee, as the share money if they're issuing bonus shares. That is fully paid bonus shares is what I'm speaking about. I'm not speaking about technicalities of bonus shares. I'm just speaking about the taxation of the bonus shares. Okay. Cost of acquisition minus I'm doing, and the short-term capital gain is going to be 3,96,000. That is cost of acquisition in case of bonus shares. Remember, allotted on or after 1/4/2001, it is going to be nil. Before 1/4/2001, whatever the bonus shares, whatever the uh, cost of acquisition for the bonus shares would be going to be the fair market value as on 1/4/2000. Allotted after 1/4/2000, on or after 1/4/2001, nil. Cost of acquisition nil for bonus shares. Allotted before 1/4/2001, fair market value, cost of acquisition shall be fair market value as on 1/4/2001. Clear? This is your short-term capital gain, 3,96,000. We already know 10 rupees is the bonus shares which this fellow has received for 200 shares. You're going to multiply and take the total. In the question, they have asked you the total income, and they've also asked you the tax liability. So the total income is going to be 5,94,000. Clear? Yeah. The tax liability, or we all of us know the short-term capital gain and the long-term capital gain. Long-term capital gain coming under section 112A comes with a 10%, and excess of 1 lakh rupees is going to be taxable under 112A. That is 1,96,000 is your total. Out of that, 1 lakh rupees is the exemption which the government itself has provided. I'm going to subtract that with my long-term capital gain. And whatever 96,000 I'm getting multiplied by 10% is going to be 9,600. Clear? Short-term capital gain under section 111 is going to be 98,000. That is 3,96,000 minus 2,98,000. People, 3,96,000 is nothing but your short-term capital gain which you got, people. Remember, 3,96,000 is the short-term capital gain. In short-term capital gain under section 111A, you don't have any exemption of excess of 1 lakh taxable, nothing like that. 15% flat taxable on your short-term capital gain. Now, can I say, whatever this fellow, Mr. Mithun, this fellow is coming under the tax liability, that is coming under the default tax regime. Under default tax regime, you have a basic exemption limit given up to 3 lakh rupees. So 3 lakh rupees you can exhaust, up till 3 lakh you need not pay the tax. So out of 3,96,000, 3 lakh rupees is the exemption available. In this 3 lakh rupees, 2,000 rupees I've taken exemption. First I've removed from the amount of 3 lakh rupees of exemption. I removed 2000. Okay. Then I got 2,98,000 as the remaining. This 2,98,000 I exhausted with this 3,96,000, which is resulting in 98,000. That I have multiplied with 15%, and this 15% is 14,700. Clear? Now the total of the capital gain I have calculated. However, you will get a rebate if it is under section, that is if your total income is less than 5 lakh. In case of normal provisions, in case of this 115 BAC, it is going to be your, in case of 115 BAC, it is going to be, that is 7 lakh rupees for that matter. Rebate under section 87A, 14,700. 24,300. All of us know, under your normal provisions, it is going to be 25,000, or your 25,000, that is whatever the amount which you are going to get it in total, or your normal calculation, whichever is lower, you are going to get this one. However, long-term capital gain, whatever you are getting, people, this is taxable. This is the special rates of tax which is going to be taxable, and rebate under section 87A, you can't claim it under your capital gain. You can claim it only for your short-term capital gain, not for your long-term capital gain. So 9,600 becomes taxable. HEC at the rate of 4%, that is 9,600 into 4%, you are going to multiply. What are the answer you are getting? This will be your tax liability. Clear? I hope this question is very clear. Let's move forward with the next question, people. It's a simple question. No complications. Nothing is there in this question. Simple question. See, Aarav converts his plot of land purchased in July 2004 for 80,000. This fellow converts. This is the concept of your capital asset converted into stock in trade. Okay, clear. So Aarav converts his plot of land purchased in July 2004 for 80,000 into stock in trade on 31st March 2023. The fair market value as on 31st March 2023 was 3 lakh. That is fair market value. That is on the date of conversion is going to be so much. Stock in trade is sold at 3,25,000 in the month of January 24. Find out its taxable income and which side it will be taxable. CII is already given in the question. Now, this is the concept of conversion of the capital asset into stock in trade, people. That is, Aarav converts his plot of land for 80,000 into stock in trade. That is, date of conversion is going to be 31st March 2023. That is, year of conversion would be 22-23. Year of conversion is this 22-23. Now, after the year of conversion is 22-23. Can I say in the year 23-24 PY, which is relevant for us, this year it is going to be, you have actually sold it in Jan 24. That is the sale of that capital asset converted into stock in trade has happened in 23-24. Clear? Now, whatever the capital asset you are going to treat here as, or the fair market value of the capital asset which you are going to treat it as, that is whatever the capital asset was valued at 80,000, it was into stock in trade, and the fair market value as on 31/3/2023 was, this date it was 3 lakh rupees. Clear? Stock in trade it was sold for 3,25,000. Now what happens? You need to understand the concept of capital asset converted into stock in trade, people. What will happen is that when you're converting your capital asset, that is the plot of asset you had, that is 1 acre of asset, 1 acre of capital asset. Now you have converted it into plot of land. That is, you have made it as 30, 40 or 60, 50, 60, 100, whatever the plot of land you have sold, and you are selling it as stock in trade. Remember, this comes under section 45, wherein you are going to state there are certain exemptions wherein the capital gain is not going to be taxable in the year of transfer, but it is going to be taxable in the year of receipt. Whenever you get your actual money, that year it is going to be taxable. Everyone, transfer might have happened in different year, but taxability is going to be in the year of receipt only. Everyone, it is going to be in the year of receipt only. So now whatever the point which I have stated, it is going to be conversion of your capital asset into stock in trade, right? Try to understand the concept of your capital asset conversion into stock in trade. Okay. conversion of your capital asset into stock in trade. When you're converting your capital asset into stock in trade, please try to understand one point over here, people. I'm giving you the logic over here. Year of conversion is going to be 20 to 23. PY 20 to 23 is the year of conversion. What do you mean by year of conversion? That is the year where you have decided I want to convert my capital asset, whatever the 1 acre of land, into 30, 40 sites or 60 by 100 sites in the year 20 to 23 as per this question. Okay. Now, when it was purchased, people, when it was purchased, see, on July 2004, that is in PY 2004 and 5, this capital asset was purchased, correct? 4 and 5 it was purchased. What was the CII at that point of time? 113. CII was 113. In the year 20 to 23, the CII is 331. And in the year of sale of that stock in trade, it is going to be 348. It is going to be 348. This is the concept. Now, think of it, people. Suppose you would have sold your capital asset in the year of conversion only. That is, you are converting that acre and selling it as stock in trade. Correct? Suppose you have converted, instead of conversion, you have sold it directly as your capital asset only. Can I say you would have sold it at the price of fair market value as on just the date of conversion? Whatever the date you have decided to convert, instead of converting, if you would have decided it, I want to sell it as a capital asset only, 200% you would have sold it at the fair market value as on the date of conversion. So now tell me, what is the fair market value on the date of conversion here, people? It is going to be 3 lakh, right? It is going to be 3 lakh over here. Now, at what price you are selling over here? 3,25,000. That is the stock in trade being sold it at, was sold at 3,25,000 in January. At what price it was purchased? It was purchased at the original cost of 80,000, for which you will get indexation. Okay. Now, if you observe carefully, you are going to get the tax in two terms, one in capital gain and one as in PGBP. Two different, for the same asset, for the same point, for the same transaction, you are going to get taxation in two different heads, capital gain and PGBP. Now, let's try to understand how will the capital gain affect in capital gain, tax effect in capital gain and in PGBP. See, in case of your capital gain, remember, suppose you would have sold your capital asset only instead of conversion. 200% your sale consideration would have been fair market value as on the date of conversion. 200% you would have sold at this value only. Clear? Now, what is the benefit that you're going to get? Obviously, you're going to get index to cost of acquisition. Indexation benefit, that is 80,000 whatever you have as the cost of acquisition. The year of transfer, remember people, your if you would have sold, you would have sold it in PY 20 to 23 at the CII of 331. That is the transfer has happened in the PY 331. That is in the PY 23-24 divided by what is the year of purchase? 113. I hope all of us know the indexation calculation, indexation formula, and also how to calculate this indexation. If you don't know, watch those classes and then come back. Okay, I've just taken the indexation point very straightly, assuming you guys already know the concept of indexation. If you don't know, please go and come back. Okay, fair market value as on the date of conversion. This 80,000 into 331 divided by 113 is the index to cost of acquisition. What is the fair market value as on the date of conversion, people? 3 lakh. So 200% I would have sold it at 3 lakh. Everyone. If I do this math, 80,000 multiplied by 331 divided by 113, what I would have got? You guys do it. You guys do it, please. You guys do it from your end also. 80,000 multiplied by 331 divided by 113. If you do this, you will get a 234, 336 as your indexed cost of acquisition. Correct? If you subtract this with your 3 lakh rupees, how much would you get? The capital gain taxation would be 65,663. This is what you would have done in case of your capital gain. Everyone clear? Now let's try to understand what you would have done this in case of your PGBP. Okay. People in PGBP, which year you are going to sell? 23, 24. What is your sale price of the PGBP? What is your sale price, people? The sale price is going to be 3,25,000. No, that is what you are going to consider. 3,25,000. Now tell me, people, 3,25,000. Can I say for the same transaction, the asset which is going to be considered for the purpose of taxation would be this capital asset into stock in trade, nothing but one transaction. The total value which you got for that asset, the total value which you got for that same stock in trade was 3,25,000 ultimately. It means your tax purpose, the total income combining your capital asset, combining your stock in trade, that is capital gain and PGBP combined, you should pay only for 3,25,000, not 3,25,000 plus 3 lakh. People know. Sale has happened only for an outsider once, that is in the form of stock in trade. Your total amount received from the outsider is 3,25,000. Total income should comprise of only 3,25,000 only maximum. It should not go beyond that. So my sale price is going to be 3,25,000. If you observe something carefully, the 3,25,000 amount you are getting after conversion, that is after PY 2022-23. In case of your PY 22-23 up till year, it was capital asset. You've already offered that amount of 3 lakh rupees as tax over here, already considered. Why will you take it again in case of your PGBP? It has to be taxed only in one situation only. Everyone, it has to be taxed in one situation only. That is in 3,25,000 minus your 3 lakh. That is the fair market value as on the date of conversion. What it is going to be? It is going to be your ultimate point wherein it is going to be taxable is 3 lakh rupees. You've already shown it as your capital gain. Why will you show it again? Here, you've already offered for tax in your capital gain. You're not going to show it again. 3,25,000 is the total amount that you should show ultimately, including everything. 3,25,000 you've offered for sales price fine. But you've already considered 3 lakh rupees over here. No, you shouldn't take for the purpose of calculation again. So the remaining 25,000 whatever you have, this will be considered as my PGBP income. Clear? Whatever the amount which I have written, can I say this is nothing but the fair market value as on the date of conversion? Fair market value as on the date of conversion is going to be 3 lakh. That is 3,25,000 minus 3 lakh. How much would you get? 25,000. Here 3 lakh minus so much is so much. This is going to be your capital gain taxation. This is going to be your PGBP taxation. I hope all of you have understood. Let's do this. See the and solution very soon. See, as on the date of conversion, it was 3 lakh. I've done the index to cost of acquisition. I've got the answer. This is my long-term capital gain, whatever I've calculated. The sale price is 3,25,000 for the purpose of PGBP. The fair market value is 3 lakh, which I've already considered over here. I'm not going to take that income twice. Only excess of that amount, which I've already offered for tax, would be subject for taxation. That is 25%. Computation of a taxable income of Mr. Aarav. The total of this under long-term capital gain, and this under your PGBP, it is going to be 25,000 plus 65,664. The total is going to be 90,664. Clear? Everyone? Okay. Let's move forward with the next question. People, the next question is similar to the concept which we have seen before. But now let's try to understand what they have done. Mrs.Harshitha, she purchased land of 35 lakh in PY 24 and 5 and held it as capital asset till 20th March 23. Held as capital asset till 20th March 23 means till PY 22-23 she held it as capital asset. Okay, fine. She started real estate business and converted the said stock into trade and where the fair market value was 210. So the year of conversion, that is the year of conversion was 22-23. Till 22-23, she was holding it as asset. She has converted it. The year of conversion is 22-23. She has converted. And as on the date of conversion, the fair market value as on the date of conversion is going to be 210 lakh. Remember this point. She constructed 15 flats of equal size, quality, dimensions. Cost of the construction of each flat is 10 lakh. Construction was completed in February 24. She sold 10 flats for 30 lakh. The remaining 5 flats were held as stock. She constructed total, that is whatever the plots, whatever the area she converted capital asset into stock in trade, she converted 15 flats of equal size. That is, she constructed 15 flats. Okay. After converting 15 flats, the cost of construction, that is, this becomes your again your cost of improvement. People remember this instead of considering not instead of considering it as cost of improvement. No, you will not consider it as cost of improvement. You are going to consider it as cost for your case of PGBP because you've already converted it into stock in trade. No, so after conversion of stock in trade, whatever cost you're going to incur, it will be the cost under your PGBP, not under your capital gain. Okay. So 10 lakh rupees each per flat means total cost 10 lakh rupees for one flat multiplied by for 15 flats, whatever the answer you would get, that will be a total cost of construction. Okay. Okay. Construction was completed in February 24. She sold 10 flats at 30 lakh rupees per flat and the remaining 5 flats were sold. That is, she has sold 10 flats in the PY 23-24. In PY 23-24, she has successfully sold 10 flats. So my capital gain for the capital asset converted into stock in trade will arise only to that extent of 10 flats in PY 23-24. Next, whichever year that remaining 5 flats is there, that is out of remaining 15 total 15 flats, 10 flats being sold. This will be subject to taxation in my PY 23-24, and whatever I'm going to consider over here for 5 lakh for those 5 flats, it will be taxable in the year of sale. We have not been provided with any information when that 5 flats were sold. So we are going to ignore this for the purpose of capital gain computation in our question. It means we are going to do everything in a proportionate basis over here. Clear? Now, she invested 50 lakh, that is which is coming under in bonds in National Highway, which is coming under section 54 EC. All of us remember section 54 EC, wherein you are going to get the maximum deduction up to rupees 50 lakh if you would have invested within 6 months from the date of your transfer of your capital asset. Maximum, she has invested 50 lakh in NHI bonds and 50 lakh in RECL bonds. Total combined under section 54 EC, you can take a maximum of rupees 50 only, people, not more than that. Clear? Compute the income chargeable under capital gain business income, Mr. Ashit, indicating the above transaction. CII will always be given in the question. You need not worry about CII. You don't need to remember. If you want to remember, you can remember for the PY, relevant PY of your exam, and the PY 2001 and 2, which is going to be 100. If you remember those two, it's more than enough. Okay. Yeah. Computation of your capital gain in this case, if you observe something, people see here, fair market value and the date of conversion or whatever the concept which I had explained over here, it is going to be the same concept. If you're directly looking into question number 3 for the solution, please do look into the question number 2 because I've explained the entire logic behind why are we going to consider the capital gain and PGBP like this. If you've already watched question number 2, well and good, you can continue. Full value of consideration, that is, you're going to consider the fair market value in the date of conversion. It is going to be 2 crore 10 lakh. Next, whatever for the capital gain, 200% I'm going to get the indexation benefit, right? So, indexation cost I'm going to get, I'm going to consider and I'm going to subtract. After this, whatever the answer which I get, this is nothing but my capital gain. This is nothing but my total capital gain, people. Total capital gain on the entire capital asset. But I've told you only to that extent of sale of 10 flats. My capital gain for the capital asset to that extent of whatever proportionate amount I have to consider. If this total capital gain you are going to get for 15 flats, people, how much is it going to be for 10 flats? That is what I'm going to consider. See, total capital gain is so much. This total capital gain I've taken for the entire capital asset. But out of that, the proportionate basis, I'm taking it as flat basis. If this total is for 15 flats, how much is it going to be for 10 flats is my question. It is going to be 71,65,192 is my capital gain which is subject to tax in PY 23-24. But out of it, people, this fellow has already done exemption, that is invested in NHI bonds or RECL bonds under section 54 EC. Maximum deduction which you're going to get is up till 50 lakh. Now, the capital gain which has arisen for AY 24-25 or PY 22-23-24, which are both the same, is going to be 21 lakh 65 6,190. I hope it is clear. Clear, people? Hmm. The next one is going to be a business income. Array, up till 22-23 year of conversion has happened. In PY 23-24 you have sold. To that extent you have calculated capital gain. Now you need to calculate your PGBP income. How do you calculate? The sale price of flats you have. How many flats? This multiplied by 30 lakhs. One flat value is 30 lakhs. So sale consideration total you have computed is 3 lakh. No. Array, out of the total tax that you need to pay for 3 lakh, you have already considered to that extent of how much here? How much you've already considered? That is fair market value in the date of conversion. See, 210 lakh is the date of conversion. This was for total 15 lakh. Array, 210 lakh is the total fair market value on the date of conversion, people. Total 210. Now I have to take it in a proportionate basis. How do I consider it in proportionate basis? Means 210 lakh is going to be 210 lakh is going to be the total. 210 lakh is going to be the total for how many places? This 210 lakh is going to be total for 15 flats. If this is the case, how much is for 10 flats? Cross multiplication. If you do the cross multiplication, you are going to get 210 lakh fair market value for the entire capital asset converted into your flat to that equivalent of 15. Entire capital asset converted into 15 flats. Converted into 15 flats. If this is the case, how much would be how much would your capital gain to that extent of 10 flats would be? Out of this 15 flats, 10 flats are sold. So remaining 5 flats are there. This 5 flats I'm least bothered. I'm only bothered about this 10 flats. Yeah. So out of this, for how many things you have for 10 flats? That is the point. Clear? Fair market value on the line on the date of conversion. Cross multiplication I'm doing. Just to cross multiplication, people. That's a fair market value I'm converting. That is, I'm not converting this figure. Bhagavanta, please, no. I'm not converting this figure. I'm converting this figure. This figure is for total 15 converted into 10. This whatever you have done, people, I've taken it in proportionate. If you want to do something in a different way, take this 210 lakh. You can do this one also. 210 lakh is for 15 flats. How much is for 10 flats? Okay. This 101, whatever you got, whatever the answer which you got. If this is for 15 flat, if this is for 15 flat, how much is for 10 flat? You can do this. Are you're going to get the same answer here. Total, taking the total capital gain and taking it in a proportionate basis. Taking it an individual in a proportionate basis, you are going to get the same capital gain, my dear people. Please don't get confused. For God's sake. Okay. So whatever the fair market value, you're going to get 1.4 crores. Then you have incurred the cost of construction. No? So after conversion of your capital asset, whatever cost which you incur, it is going to be considered as your stock in trade. It's going to be considered as your PGBP expenses. So cost of construction of flats you're going to consider, that is 10 multiplied by 10 lakh. You're going to get 1 crore. Total being considered 3 lakh you're going to take it. Business income you're going to get, that is out of 3 crore. To that extent of 10 flats. 1.4 crore fair market value already taxed. To that extent of 10 flats, 10 lakh rupees is the cost which you incur. This is as per your PGBP expenses. Whatever the remaining amount you're going to get is going to be your business income. Clear? All of us clear? This is going to be 60 lakh. I hope everyone, this point is being very clear. Okay. Next question. Mr. A is an individual carrying on business. His stock and machinery were damaged and destroyed in a fire accident. The value of the stock lost, the total damaged was 6,50,000. Certain portion of the machinery could be salvaged. The opening balance of the block as on 1/4/2023, WDV as on 33/2024 after providing depreciation for PY 23/24, 10 lakh 80. During the process, safeguarding in the fire, fighting operations, Mr. A lost his gold chain, diamond ring, etc. Fair market of this item was 1,80,000. Clear? Mr. A received this fellow, he received the money from the insurance company. Insurance company, he has received for loss of stock so much, machinery so much, gold chain and diamond ring so much. You are requested to briefly comment on the tax treatment of the above items under the provisions of the Income Tax Act 1961. See, what have they asked you? Their tax treatment on the above three items. That is, first of all, for loss of stock. Remember, people, whatever the compensation that you would get for loss of stock, it is going to be treated as the income received under your PGPP only. Okay. So, whatever the loss of stock in trade which you are going to consider, that will be your trading receipt considered under PGPP. In case of damage of machinery, people, in case of damage of machinery, see what will happen in case of damage of machinery is that the compensation which you have received towards the damage of machinery, that is, it's going to be considered as your short-term capital loss. That is, whatever 6 lakh rupees which you have received. What was the WDV value when that fire had occurred? When the fire had occurred, the WDV value was 10 lakh 80,000. But how much you have actually received, people? You have actually received 6 lakh. So the difference of that is going to be a short-term capital loss. Machinery is your short-term, it's your capital asset. Whatever the determination that you're going to get, always remember the asset which are subject to depreciation, that is nothing but depreciable asset, are always treated as short-term capital gain or short-term capital loss. Never the long-term capital gain concept comes into picture in case of your capital, in case of your depreciable asset. Okay. So towards gold chain and the diamond ring is going to be how much? 1,80,000. So towards gold chain and diamond ring is 1,80,000 means whatever the loss which you incur to the extent of gold chain and diamond ring, your original value was market value is 1,80,000. You have actually received 1,80,000. So in this case, whatever the gold chain and diamond ring comes under the definition of capital asset, jewelry is covered. So the capital gain has been computed by reducing the indexed cost of acquisition from the insurance company. Whatever the amount which you have received, you can take the indexed cost of acquisition benefit over there, subtract that, whatever the answer which you get, you can consider it as your capital gain, either short term or long, depending on when you own it. Clear? Simple question, not much brainstorming and all. The next question comes, people. It is very, very important because the next question number 5, question number 6, and question number 7 are almost related to each other. Okay. It's almost linked and related to each other. Let's try to understand. Okay. Now, now let's pay close attention. Mr. Sarthak entered into an agreement with this Jaikumar to sell residential house on 16/8/2023. This is going to be your date of agreement, my dear people. Date of agreement is going to be 1 lakh, that is 16/8/23. 1 crore 50 lakh is the sale consideration which they have determined. At the time of date of agreement, what has happened? Sale proceeds were as follows: 20% paid through account payee bank draft on the date of agreement. On the date of agreement, that is on 16/8/2024 only, 23 only, this fellow paid 20% through account payee draft. Clear? 60% of the bank possession of the property, balance after completion of the registration. Fine. Mr. Jaikwa, this fellow, handed over the possession of the property on 15/12/2023 and registration process was completed on 14/1/2024. Can I say this is going to be your date of registration? People, date of agreement, date of registration point is very, very important. I'll tell you the reason why. Okay. He paid the sale proceeds as per the sale agreement. That is a value determined by the stamp duty authority. Stamp duty authority, that is STV, as on this respective date they have provided. This is your date of agreement. This is your date of registration. This is the date when the possession was handed over. This becomes irrelevant for us. The relevant point, relevant SDV over here is date of agreement and date of registration. Now, This fellow, Mr. Sarthak, had acquired the residential house at Kanpur on 1/4/2001, 30 lakhs. So this becomes your cost of acquisition on this date. That is in year 1 and 2, this fellow has acquired. So CII for this point is going to be 100. In the year of sale, it is going to be 348. So after recovering the sale proceeds from Jaikumar, he purchased two residential house, one in Kanpur, 20 lakh, and another one in Delhi, 35 lakh. Both are in India only. That is on 28/5/2024. Compute the income chargeable under the capital gains of Mr. Sarthak for AY 24-25. Cost inflation index for financial year 2001 and 2 is 100. Okay. 2023-24 is 340. So try to understand, people, what are they trying to tell. Okay. Under section 50C, under section 50C, the provision states that, see, I'll explain the provision first and then we'll understand why this provision is relevant. See here. Under section 50C, what it states is that you're going to determine the full value of consideration in case of land or building or both. Okay, that is whatever is your starting point in your sale consideration point, people, in your capital gain computation, sale consideration, whatever you're going to consider. What should that amount be is the question under section 50C. In case of only land, building or both, not anything else. This is equivalent. This section, you can relate this section to section 43CA also. You can relate to this, but there's a small difference between 43CA and section 50C. Now, whatever we are concentrating is only on the section 50C. We'll move forward. Okay. This section states that you're going to consider the actual sale consideration or your STB, that is your stamp duty value. Actual sale consideration or your stamp duty value. Stamp duty value as on the date, that is as on the date of stamp duty value, provided, that is you're going to consider your fair full value of consideration as your actual sale consideration. That is, in my question, what is my actual sale consideration, people? Think, okay. What is my actual sale consideration over here? 1 crore 50 lakh. I'm going to take my sale consideration in my computation. That is, I'm going to consider my sale consideration as my 1.5 crores over year, provided my actual sale consideration is up to 110% of my stamp duty value is up to 110% of my consideration. What do I mean? See, I'm going to consider, I'll repeat the sentence. I'm going to consider the value, that is the sale consideration for capital gain purpose. I'll take one amount. That amount will be 1.5 crores. That is my actual sale consideration only. If my SDV, whatever the SDV which I'm going to consider, okay, if my SDV is up to 110% of my consideration. Everyone, what is my actual sale consideration is 1.5 crores. Now, the problem is that you have three STVs provided over here. People remember, three STVs are there. Date of acquisition, date of agreement, date of registration and the possession handed over. Ignore this possession handed over because it is irrelevant for our exam purpose. That is, provision doesn't consider the possession of the property being as a STV anywhere. No provision states that point. The confusion now comes, that is, we have to consider either the date of agreement or the date of registrations STV as my STV for this purpose of calculation year. Which one should I consider? Should it be 1.7 crores or should it be 1.71 or 1 crore 71 lakh 50,000? What should that be? I should understand which of this STV will be the one which I'll be considering over here. Clear? Remember, in order to consider the SDV on the date of agreement or the date of registration, the provision states you can consider the date of agreement's SDV for your computation, provided you have paid it in account pay check, account pay draft, any other clearance, electronic clearance mode in your at the time of you paying advance for that. On the date of agreement, people, see, if I'm going to register, if I'm going to buy a property, I will not go buy today. I'll buy it in tomorrow. That is tomorrow, day after tomorrow. Immediately, I'm not going to do that. I'm going to check some 10, 15 properties, whichever is comfortable for me, I'm going to buy that. So there will be date difference between the date of agreement and the date of registration. And if both the dates are same, I have no problem. I'll just take one STV and close. The problem comes when there is STV, date of agreement STV is different, and the date of registration STV is different. Both are same date, I don't have any problem. These are through two different dates. No? This is 16/1. Where is it? This is going to be 16/8. This is going to be 23. This is going to be 14/1/24. Everyone, two different date. No. Now I have to consider, I can't consider whichever is lower, whichever is higher. I have to satisfy condition over here. That is on the date of agreement, you would have paid some advance. No. That advance you should have paid through banking terms only. That is account pay check, account pay draft, any other clearance mode. All the points being satisfied, that is, if you have paid through banking terms, in speaking in simplicity purpose, you would consider the date of agreement as my SDV. If you would have paid in other than account pay check, account pay draft, or any other clearance mode, can, in my example, if you have paid it in cash, whatever advance you have paid, your 5,000, 10,000, 5 lakh, 10 lakh, whatever advance you have paid, if you would have paid it in cash, in my example, in my point, it will be date of registration SDV. People, all of us know the land value keeps on getting increased. It gets appreciated. It will never get depreciated. So the department is like, okay, we'll do one thing. We don't want any cash transactions to be happening over here. So we'll do one thing. We are against the cash transaction. We are going to give you some benefit of considering the lower STV. All of us know STV date on the date of agreement, that is which has happened on 16/8, will always be higher. That is, will always be less than your date of registration. First date agreement happens, then only registration happens. No, people, registration doesn't happen first and agreement happens next. No, first agreement happens, then registration happens. Two different dates, little time is there, and SDV value will 200% be different. That is increased from your date of agreement to your date of registration. Whatever 110% of the consideration you are going to get over here is dependent on the SDV which you are going to take. It will see it very soon. But can I see this whatever 1.7 crores which you are going to consider? Obviously, less the sale consideration you are going to consider, less is your capital gain. So you always wish to take lower SDVs, never your higher SDV. Because people with a rational thinking will always wish to pay less tax in a very legal provisional way. 1.7 crores is what I'm taking for my date of this agreement. 1.71, that is 1 crore 71 lakh 50,000 is for the date of your registration. Department is like, government is like, we'll do one thing. We will give you date of agreement SDV only, take lower SDV only. But you should have paid the advance in your account pay check, account pay draft, any other clearance mode. If you have done something which we are happy for, we'll do one thing. We will give you lower SDV so that you will also be happy. That is, I'm going to consider 1.7. Suppose if you have paid it in cash, where the government is like, I'm not at all happy that you have paid it in cash. We are not going to allow the date of agreement. In that case, you have to mandatorily take date of registration only. If you have not complied with the provision, date of registration. Complied with the provision, be happy, take date of registration. People, in this case, what has happened? This fellow paid it in account pay check, account pay draft on the date of agreement, advance of 20%. Clear? So whatever 20% he has paid it in account pay check, account pay draft. So it is going to be as per the provision. So you are going to consider 1.71 crores. Clear? Now calculate 110% of this particular 1.5 crore. What is 110% of the consideration? My consideration is 1.5 crores. Multiplied by 110%. Please do it, people, from your end also. Please do the calculation. Please do the calculation. 1 crore 50 lakh multiplied by 110%. You're going to get 110% of this is going to be 1.65 crores, right? Your SDV, if it is less than or equal to 1.65 crores, then your actual sale consideration, whatever you have done, you will take that. That is, see, when I'm coming for the negotiation with you to buy a property, whatever the SDV market value is there, it is not necessary that I will buy it at exactly at that price only. I will negotiate and I will say here and there 10% plus or minus I might do. So department is like, if your consideration is 1.5 crore, take little bit benefit of 10% adding to it. 10% adding to it, that is 110% is the limit which I give for you to take, for you to make the transaction as genuine. If that is the case, whatever money which you have received, pay tax only for that. If you're doing something, that is your stamp duty value is exceeding 110% of the consideration, that is 10% of the extra benefit which I'm giving, it is more than that, then whatever transaction which is which you're doing is not genuine as per the provisions, you are not genuine. So we are going to do what? We are going to consider your STV as only your sale of consideration, even though the money which you have received in your pocket is going to be your sale consideration only. 1.5 crore is what the money which you have received actually. But for the purpose of taxation, we are not going to consider 1.5, we are going to consider 1.7. This is the provision. So what has happened in the question? It is 1.65 crores. So in this case, whatever you have done is not a genuine. So we are going to consider STV as your sale consideration. 1.71, 1.7 crores. Clear, everyone? I hope it is clear. Okay. So in this question, you can see here, my fair value of consideration I have considered 1.7 crores because my actual sale of consideration is 1.5 crores. SDV on the date of conversion, that is stamp duty value date is 1.71. On this date it is 1.715. 2 lakh paid through account pay check. So date of agreement only I am going to consider the SDV. Out of this one, I'm going to consider 110% of my actual sale consideration. My actual sale consideration is 1.5 crore multiplied by 110%. Your STV should have been up to 1.65 crore, but it is more than that. I'm going to consider. You're not doing the transaction which is genuine, so I'm going to consider 1.7 crores. Everyone, I'm going to consider 1.7 crores. Clear? No. So minus index to cost of acquisition, all of us know the cost of acquisition in the question. How much was the cost of acquisition given in the question, people? 30 lakh was the cost of acquisition which was purchased on this date. Transfer has happened in 2023-24. That is 23-24 transaction has happened. So I'm going to consider my index to cost of acquisition. I assume you guys already know index to cost of acquisition calculation. 30 lakh divided by 100. 348. You already got index to cost of acquisition. Whatever the difference that you would get, 1.7 crores minus 1.4040 double, whatever 1 crore 4 lakh, it is going to be 65 lakh 60. Clear? Now, with this fellow has purchased the property, that is two properties over here. One is of 30 lakh, sorry, one is of 20 lakh, sorry, one is of 20 lakh and one is of 35 lakh. Totally has purchased for 55 lakh. People remember, as per section 54, you can take exemption of the residential house up to 2 residential house, provided your capital gain is less than 2 crores. Hey, how much is your capital gain which you have considered over here, people? 65 lakh 60,000. It is less than 2 crore, no? So up to 2 properties you can take exemption under section 54. Take it, enjoy. This is going to be the addition of 35 lakh plus 25 lakh. Sorry, plus 20 lakh. It's going to be 55 lakh. So what would be my long-term capital gain that would be chargeable to tax would be 10 lakh 60,000. That is difference between these two would be considered as my capital gain which is subject to long-term capital gain which is subject to tax would be 10 lakh 60,000. Clear, people? Understood? This question becomes the base for the next questions also. Next two questions as well. So it is very important for you to understand question number 5. Okay. Next question is similar to that, but there are certain additions to this questions. Now, let's see. Mrs.Yuvika, she bought a land of 80 lakh in May 25. Registration and other things were 10% of the cost of land. So, 80 lakh, 10% of the cost of land. Cost of land is 80 lakh, no? 80 lakh plus 80 lakh multiplied by 10% going to be 8 lakh. So, my total cost of acquisition is 88 lakh. Okay, great. She constructed a residential house on the said land for 100 lakh during the financial year 7-8. This is the cost of improvement. Index to cost of improvement you are going to get. No problem for life. This becomes your cost of acquisition. Indexation will take later. This becomes your cost of improvement. Simple. She entered into an agreement for sale of the above residential house, Mr. Johar, in 2015-16. PY 15-16. This is important. I'll tell you the reason why. Okay. The sale consideration was fixed at 700 lakh. 700 lakh on 23/5/2015. She received 20 lakh as advance by executing an agreement. However, due to the failure, negotiation, it failed. There was no negotiation happened. Hence, the same amount, that is negotiation failed. Hence, the said amount of advance was forfeited. Forfeited. The advance is forfeited. That is advance which is received for the house property. That is for the acquisition for this capital asset has been forfeited in PY 2015-16. Okay, everyone. The provisions of this advance forfeiture, which comes under section 51 of the Income Tax Act 1961, states that if you have received any advance in case of the capital asset and in case of this land building or both, and it has been forfeited on or before, that is, it has been forfeited before 1/4/2014, then you have to adjust that with your cost of acquisition. If it is forfeited on or after 1/4/2014, it is to be considered as your income from other sources in the year of forfeiture. Clear? Now, in this situation, tell me people, 15-16 it has been forfeited. It is after 1/4/2014 only, no? If that is the case, whatever I'm going to consider, whatever 20 lakh rupees I've received, I'm going to consider as income from other source in PY 15-16 only, and I'm going to close completely. I have no problem for life. I will close completely. Everyone, that is going to be your point. This 20 lakh rupees, I have no relevance in my PY 23-24 because it is already offered to tax in PY 15-16 and it is closed. I have no relevance in my PY 23-24 was my point. Okay. Suppose, let's consider this forfeited had happened, suppose in 13-14. Okay. Before 1/4/2014, it has happened. So, people, if this was the case, I would have adjusted this 20 lakh rupees in my cost of acquisition. This concept of whatever I've told, forfeiture adjusted with the cost of acquisition, it is there in your question number 7. Okay, we'll do that and we will understand. As of now, all of us have understood. In PY 15-16, it is going to be so much, and you're going to consider this, and we are going to close. Clear? Mrs.Yuvika again entered into an agreement on 1/8/2023 for sale of 810 lakh is the sale consideration. Remember, people, this is going to be a sale consideration. Okay. She received 80 lakh as advance through RTGS. STV as on the date of agreement. SDV on the date of agreement is 890. Sale deed executed on this, that is the date of registration is so much. Date of agreement is this. Determination of the facts or the information in the question is equally important in solving the solution. Okay. However, the stamp duty value has revised value, hence the value of the stamp property was moved to 900 lakh. That is on the date of registration, the stamp duty value is 900 lakh. Yuvika paid 1% as the brokerage. Okay. Subsequent to sale, Yuvika made the following acquisitions. Acquired 2 residential house at Delhi and Chandigarh, 130 and 50 lakh. Acquired a residential house at UK, 180 lakh, 23 to 2024. Subscribed to NHI bonds, that is for the 54 EC, 50 lakh and 40 lakh. She has made so many investments. You'll understand those investments which are coming under section 54 series very soon. 54 EC and all, it's coming. We'll see that. Okay. Compute the income chargeable under the head capital gain of Mrs. Yuvika for AY 24-25. The choice of exemption must be in the manner most beneficial and give given CIL. All of us have understood the concept of that calculation which comes under section 50C, people. That is, if you have not watched that question number 5 is the explanation for the provisions which are mentioned in question 6 and 7. Both the question explanation provision related which is applicable, that is section 50C is there in question number 5, explained in question number 5 detailedly. If you want to understand the reason, please go watch that question number 5 and then come back. It will become very easy for you. Okay. Now, people, cost of acquisition is given in the question. Okay. What they have provided here is 810 lakh is the sale consideration they have determined. I told you the date of agreement or the date of registration SDB I will take provided advance is paid to banking terms. Array, account pay check, account pay draft, other clearance mode. Other clearance mode or other electronic clearance mode includes online banking, NEFT, RTGS, IMPS, UPI, everything it includes. That is, it includes RTGS also. Every So 80 lakh, if she has received his advance in electronic clearance mode, then you're going to consider the STV as on the date of agreement only, which is going to be, where is it? The date of agreement, that is STV on the date of agreement 890. I will consider the STV 890 over year for my computation of my STV calculation. How much is my consideration which I've charged people? 810 lakh. Now I will compute 110% of the 810 lakh, which is going to be how much? Please do the calculation from your end as well. Into 110%, 891 lakh. Everyone, everyone. 810 lakh, 110% of the consideration is going to be 891 lakh. That is, if your SDV is up to this amount of 891 lakh, that is equal to or less than 891 lakh, you can consider your actual sale consideration, stating that you have done genuine transaction and as your sale consideration. How much is your SDV that you have considered, people? 890, no? 890 is what the SDV you have considered. 890 or 891. STV is less than your 110% of the consideration, 891. It is going to be your actual sale consideration of 810 lakh would be considered as your calculation. Everyone, 810 is what we are going to consider. Now, what is your cost of acquisition, people? Cost of acquisition, I told you, 88 lakh. That is which has been purchased in the year 2005 and 6. So, 810 lakh, where is it? 1% brokerage you are going to provide, provided in the question. Next, 88 lakh. It was purchased in this year and it was sold in 348. That is year of transfer. Indexed cost of acquisition is so much. Indexed cost of improvement is going to be so much. That is already provided in the question, people. 100 lakh multiplied, divided by this year of your whatever improvement happened in 129 will be denominator. Numerator will be 348. I assume indexed cost of acquisition, all of us know to calculate. So I'm not teaching it again. Minus I'm doing. Total of your cost of acquisition that comes up to so much. Now your capital gain would be your 270.39 for that matter. Now exemption, whatever you're considering under section 54. Exemption under section 54, remember people, you are going to get exemption under section 54 with regarding to the residential property which you have bought in India, first of all. So if that is the case, this has been completely ruled out. It has been bought in UK. You will never get exemption for that. If you bought in India also, here in this case, you have bought two properties, people, one in Delhi and one in Chandigarh. If that is the case, if you bought it in one in Delhi and one in Chandigarh, it is two residential house property. It can be allowed as deduction of the entire capital gain portion to that extent. Whatever the amount of the cost of residential property, both the houses will be allowed, provided your capital gain should be less than 2 crore. Arey, your capital gain is 2.70, that is 2 crore 70 lakh. Exceeding 2 crores, no? Exceeding 2 crores. People, if that is the case, if it is exceeding 2 crores over here, remember exceeding 2 crores means 270.39. Exceeding 2 crores, 2 crores 70 lakh. Means you can get exemption only for one residential house property that you have, which you have bought it in India. What is a residential house property that you have bought it in India, my dear people? It is going to be 130 lakh, 50 lakh, both 130 and 50. And if the option is given to you to select the exemption, which one would you select? 130 or 50? 200% you're going to select the higher exemption, because higher the exemption, lower the capital gain, lower the capital gain, lower the capital gain tax. Clear? That is 130 lakh. 130 lakh is what you would provide. 130 lakh is what I would take as exemption. 130 lakh is what I would take it as exemption. Clear? Exemption under section 54 EC. Everyone, what is it? Exemption under section 54 EC. All of us know 54 EC means investment in the bonds, NHAI or government bonds, that is RECL bonds, wherein the redemption period is beyond 5 years. After 5 years, you can take a maximum deduction of 50 lakh provided you make investment within 6 months from the date of transfer. Here, this fellow has invested 50 lakh and 40 lakh both on 23 on 29 2024, 12 2024. Both of them are going to be what? Within 6 months only. Maximum you can take only up to 50 lakh under section 54 EC. So 50 lakh I've considered here. 130 lakh as per the taxation I've considered here. Your capital gain would taxable. Capital gain that would be taxable would be 90. Clear? For whatever the notes which you are seeing over here, these notes are available in my Telegram channel. The link for the Telegram channel is given in the description. You can join over there and you can get the entire notes. Whatever the notes for whichever classes which I'll be doing posting in my YouTube classes, everything, every note for that matter is available in your Telegram channel. You can go and join. Your wish. Okay. So section, that is the next question, which is similar to question number 5 and 6. Let's try to understand. This fellow, Shiva, purchased a house property on 3,24,000. In addition, he has also paid STV at 10%, and STV is how much? STV at the rate of 10% on the stamp duty value of 3,50,000. In April 2008, Mr. Shiva entered into an agreement with Mr. Mohan for sale of house property 14,35,000. Received an amount of 1,11,000 as advance. However, the sale consideration did not materialize and advance was forfeited. People, my dear people, when was the advance forfeited? In 2008 and 9. I've told you the provisions relating to that under section 55, which state advance on this whatever capital asset, land, building or both, if it is forfeited before 1/4/2014, then it is going to be considered as subtraction, reduction from your cost of acquisition. Clear? So whatever 1,11,000 is there, I'm going to subtract it from my cost of acquisition. Remember this point being very important. Clear? Yeah. So next, on 15, he again entered into an agreement for the said house on 15/16, that is in PY 15/16. Deepika received 1,51,000 as advance, did not pay the balance amount, and Shiva forfeited the advance. So again, the same concept of section 51. Both the points are there. Here it is on or after 15, that is 1/4/2014. No? So if that is the case, 1,51,000 is going to be considered as the income from other sources, and in the PY 15/16 only. This is not going to be of any relevance in my question, that is for the capital gain computation in my PY 23/24. Clear? In August 2015, Mr. Shiva constructed the first floor of by incurring the cost of 3,90,000. On November 15, 2023, Mr. Shiva entered into an agreement with Mr. Manish for sale of such house of 30,50,000 and received an amount of 1,50,000 as advance. People, all of us know, if the advance is received through account payee check, we are going to consider the sale, that is SDV, as on the date of agreement only, because you have complied with the provision, that is advance transfer through banking channels, account pay check, account pay draft, or any other clearance mode. So I'm going to consider the SDV as on the date of agreement only. Remember this point. Everyone, if you're entering to this question directly, question number 7, directly, then the question explanation for this, why have we considered the SDV, detailed explanation has been provided in question number 5 of this particular revision class only, question class only. You can watch that question number 5, you will get a better clarity with regarding to why we are considering SDV on the date of acquisition. Okay, now we'll move forward. Mr. Manish paid the entire balance sum, and Mr. Shiva transferred the house on February 2024 to pay the brokerage of 1%. On 1st April, the fair market value of the house property was 11,85,000. SDV was 10,70,000. Further valuation of SDV as on 15 November is 39 lakh. That is, when was the date of agreement, people? This is the date of agreement. Transfer the property, that is, this is the date of registration. I'm going to consider the SDV as on the date of agreement. We already know this point because the advance has been paid through account pay check. Clear? Compute the capital gains in the hands of Mr. Shiva for AY 24/25. CII would be so much. Clear? Understood, everyone? We all know SDV is going to be so much. We are going to ignore the SDV of the date of registration. 110% of the consideration would be how much here? How much is the consideration here? 30,50,000. 110% of 30,50,000 is going to be, please do the calculation, people. 30 50,000 multiplied by 110% of the consideration is going to be 33 lakh 55,000. If your SDV is up to 33 lakh 55,000, then you can consider 30 lakh 50,000 as your sale consideration, being the case to be genuine. If not, you're doing something which is not genuine, we are going to consider the SDV value only as your consideration. Simple as that. So in this case, what is the consideration that I'm going to consider is 39 lakh. That is what we have done here. This or this SDV 39 lakh. Explanation for the same we have given over here because it is paid account paycheck. Now, whatever the brokerage is there, people remember brokerage is always going to be paid on your sale consideration, people, not on the value of full value of consideration. Whatever money which you're receiving, on that only you're going to pay bonus. Sorry, on that only you're going to pay brokerage. 39 lakh, whatever you're considering over here, this 39 lakh is purely for the purpose of taxation only. This is not the actual money you're receiving. Actual money received is 30 lakh 50,000. Clear? Now, this is the point. 33 lakh 37,320 is provided. Sorry, 30 lakh 30,500 is provided. Net sale consideration you have considered. Now, when you're considering your cost of acquisition, people remember the provision. Okay. When was this asset purchased? This asset was purchased on or before. That is, if this asset was purchased prior to 2001 and 2. This asset was purchased before how much? 1 and 2. It means if you purchase your asset, that is your cost of acquisition as per the concept of cost of acquisition section. How you're going to determine the cost of acquisition for in case of land or building is that you're going to consider first STV as on 1/4/2001 or fair market value as on 1/4/2000, 1/4/2001. Whichever is lower, you're going to consider. After this step, then you're going to calculate your whatever the answer which you get over here. That would be considered as my fair market value as on 1/4/2001. This is your step number 1. Whatever the answer which you get from here would be considered as answer over here. Or this or your actual cost of acquisition, whichever is higher. This is the provision. Why is this provision there? Very simple. See, try to understand. What would happen is that if the cost of that is the fair market value, let's consider this provision is not there, only this provision is there. People, you suppose let's consider your actual cost of acquisition is let's consider 5 lakh. Okay. And your fair market value as on 1/4/2001 is going to be, let's consider it is going to be some 8 lakh. That is, you have determined it as 8 lakh. And there is no proof as such here. 8 lakh is the fair market value as on that date. You don't have any proof. You might go to a valuator. The valuator might give something. He might do it in a illegal practice, illegal way also. That is, he might expect something and he might manipulate that amount and he might give it. Whatever 8 lakh rupees which is going to be considered, obviously you're going to consider, it is not whichever is higher, it is optional at the SSE. Obviously, you're going to consider whichever is higher only because higher the cost, lower the capital gain, lower the capital gain, lower the tax. So, in this situation, can I say 5 lakh or 8 lakh? You'll consider whichever is higher. But the provision stated that you don't have any backup over there. You might, instead of 8 lakh, you might state as 18 also. On 1/4/2001, my property was 18 lakh. You don't know anything. You might tell that. So, what the department or the act did was very simple. We are going to consider, okay, as per you, the fair market value is 18 lakh. No, wait. We'll consider it as 18 lakh. But you have to first pass this provision. First, move forward. First, qualify as per this provision. That is 18 lakh as per your provision. Array, SDV, stamp duty value is the market value which we already have. This is the garment which in the garment data it already has. So can I say it is going to be, let's consider the value was 9 lakh. SDV was 9 lakh. As per the market value which we have determined, it was 9 lakh rupees here. You might say it is 18 lakh. You might say it is 18 crores also. We don't care. We are just going to consider restrict your amount to your SDV. That is, I'm going to consider 9 lakh over here only. Whatever the answer which you get, whichever is lower would be considered as 9 lakh here. 9 lakh or 5 lakh, whichever is higher. Obviously, you're going to consider the higher. You can consider this. Same provision, same point. Please try to understand over here. Okay. What is your SDB which is provided in the question? As on 1/4/2001, SDB given is 10,70,000. Okay. The fair market value as on this date is 11,85,000. You are going to consider obviously whichever is lower. That is 10,70,000 you are going to consider. What is your actual cost of acquisition, people? Your actual cost is 3,59,000. See, whatever the answer which you got over here, 10,70,000 or 3,59,000, in this case, you are going to consider whichever is higher. That is, whichever is higher, you are going to consider 10,70,000. Now, whatever the advance money explanation which I told you, that is minus is what you are going to do. No, 1,11,000 rupees minus you are going to do. That is 1,11,000 rupees. I am going to subtract from my cost of acquisition. After subtracting 1,11,000, my actual cost of acquisition for indexation would be 9,59,000. Clear? Would be how much? This minus 1,11,000, it's going to be 9,59,000. Clear? Everyone? Next, if this is the case, 9,59,000 is what you would consider and you would. This is my cost of acquisition, people. For indexation, this is my cost of acquisition. I have to provide indexation now. No? You remember the indexation provision. Denominator will be CII of the year of purchase or 2001 or 2. P by 2001 and 2, whichever is later. So 1979 you have purchased. From your grandfather's time you have purchased. Now it is going to be, you have to consider the CI as 100. 2001 and 2 being the latest. You are going to consider, you have got the indexed cost of acquisition. 3,90,000 rupees they have spent on construction of first floor on this particular year. Denominator considered on the year of transfer. I'll take it as for the purpose of transfer. In the year of transfer, I got indexed cost of improvement over there. So whatever the calculation I've done here, and this has resulted in the short-term capital loss of 2,150. Clear? I hope everything is clear for this point. This is your test your knowledge questions of your capital gains.